After hitting a 6-year low of 4.5% in the September quarter, India's economic growth is expected to remain tepid even in 2020. Liquidity crunch, consumption slowdown, and weak job creation have weighed heavily on India's economy. Adding to the woes, the fiscal deficit is already stretched and now inflation is climbing up. Today, we are asking the question, will the budget be able to boost market sentiment? To discuss this, we have with us Sunil Singhania from Abakkus Asset Manager and Nilesh Shetty from Quantum Mutual Fund. So, starting with you, Sunil, do you think the government has the leeway to boost economic growth, which can in turn sustain market rally?
So there are two aspects to it. One is the financial, boosting, and the other is policy announcement boosting. So if you look at the announcements part, which is the second part, I think there are a lot of leeways. One is obviously, tinkering with some taxation, which leads to higher income in the hands of retail or individual population or taxpayers. And also possibility of some tinkering with the capital gain side also. So there are some avenues there. On the policy matters which might have financial impact, obviously the whole boost which the economy needed is because of lack of spending. So if the government increases its planned expenditure, obviously it will give a big boost to the economy. Planned expenditure would be predominantly on the infrastructure side. I think this might lead to slightly higher fiscal deficit, but I think it's not going to be the end of the world if fiscal deficit temporarily inches up by 30-40 basis points.
Nilesh, what about you?
I mean, given that there are significant fiscal constraints right now, and by and large the fiscal deficit number is much higher than whatever the government gives in the budget, primarily because they resorted to borrowing through public sector enterprises, which traditionally were part of the budget, to essentially subdue this reported fiscal deficit number, which most people do not believe anymore. And the aggressive tax assumptions that they had, which by and large even then looked very optimistic, and now after the actual numbers coming through look extremely optimistic, there seems very little fiscal leeway that the government has to boost economic sentiments.
Will the markets get spooked if the government misses the fiscal deficit target?
I think more or less the market is already discounting that there is going to be some slippage. But if an additional slippage is to boost the economy temporarily, I don't think market will have an impact. Because ultimately, if the economy starts to do well, it will more than recover the fiscal slippage by way of additional taxes.
No, I don't think they will get spooked. I think it is expected. It is not something which is unknown. Given that all the data is in the public domain, I don't think people will get spooked about government missing. I think it's already a given, it's a known variable. It's an unknown variable that people believe the government is going to miss. Or the expectations are that they're going to meet and government actually misses. By and large, most people already know that the government is going to miss the FY20 fiscal deficit target. What they are looking for is what is the plan next year. Do they get, given the desperation for growth, do they get even more fiscally more reckless in the sense that do they do something which can put further strain on the finances of the government?
Your final take. Will the budget be able to boost the market sentiment?
So one thing is, ever since September, the government has been constantly announcing economy and market-friendly policies. Whether it was reduction in corporate tax rate, lower tax rate for new manufacturing entities, FDI announcements, AIF in real estate, and so on and so forth. The Prime Minister himself has been meeting prominent industrialist economists and market participants over the last 1 week or so. So I think from September onwards, we have already started to see that it's having an impact gradually. But in the run-up to the budget, we might see many more announcements, I think. So I think budget would be the culmination of all the policy measures which the government want to do to boost the economy and obviously the sentiment.
I think over the years, the budget itself has lost its importance. I think the economy has grown much bigger and government finances as a part of the GDP is sort of not, it doesn't move the needle that much. You get a sense of where the government intends to spend and the long-term policy plans and a lot of social schemes. But given that now even indirect taxes are set by the GST Council, which is outside of the budget, it really doesn't sort of warrant that kind of importance as the media gives it. So we don't believe it sort of has a material impact on the investor sentiment, apart from if government does something on taxation for, say, investors in general, which will have a near-term impact on the share market. But by and large, more serious investors, apart from a cursory glance, don't give it too much importance right now.